Hi, everyone. I'm Rosemary Miller here with Bernadette Joy, the Chief Educator at Crush Your Money Goals, here to tell us 4 tax filing tips that can save entrepreneurs a lot of money. Thank you so much for joining me today, Bernadette.
Thanks so much for having me.
Absolutely. So, Bernadette, before we get into that, I want to know what inspired you to even write about this topic.
Yes, so I have been an entrepreneur for the last 10 years, and I now coach other entrepreneurs in both their personal finance and in their business endeavors. And I learned that these were the consistent mistakes that people kept making over and over again, and also the things that I wish someone told me, especially as a newer entrepreneur. And taxes can be really scary for a lot of people. And so I wanted to write an article that would hopefully remind people of some things, but also make it feel a little less scary.
Awesome. So, Bernadette, could you tell us what is your number one tax filing tip for entrepreneurs?
So, the first tip specifically for newer entrepreneurs, so if you've recently started a business, and I wish I knew this when I left corporate to start a business, is that a lot of entrepreneurs forget startup expenses. They kind of think of like, okay, here's day one where I launched my business, and then that's when they start tracking expenses. And honestly, some people don't even start tracking expenses right after they start, but a lot of people don't realize even the things that led you up into starting your business might also be things that you can deduct from your taxes. So, for example, a startup cost could include things like doing surveys for potential new markets, or ads to promote your business, or it might be the travel that you took to go to a conference before you actually launched the business. And so, looking at those expenses even before you officially started, you definitely want to check to see if those fall within the IRS guidelines of being able to write them off for deductions.
And who should one go to? Should they go to, I don't know, their best friend who does taxes for this kind of thing, or should they go to like H&R Block?
So a lot of people get really hung up on wanting a kind of fancy business accountant, and to be honest, a lot of seasoned business accountants might not necessarily take you on if you're like a newer entrepreneur. The first couple of years that I did my own business, I went to an H&R Block type of service where my expenses were still not like really complicated, and I was able to get a licensed tax professional to really guide me. But the key in working with someone like that is that you have to know what questions to ask. And so, even though it's very dry and boring, I still recommend for people to at least overview or read the IRS guidelines, because then you'll at least get some triggers or ideas of what things you should be asking your tax professional, rather than just relying on them to tell you things that they might not know about your business.
So, when it came to your first year in business, what challenges did you face when it came to understanding and managing quarterly tax payments?
It sounds very oversimplified, but I just didn't do that. Like, I just didn't know that that was something you had to do. I was someone who transitioned from corporate, and so I was so used to having a paycheck where my taxes were automatically deducted. And so no one had ever really explained to me that as a new entrepreneur or as a solo entrepreneur, that I was responsible for making sure that I had to pay quarterly taxes. I was just under the assumption that I would pay all of those taxes at the end of the year. And so I came in for quite a big surprise in my first year of business when I learned that failure to pay your quarterly taxes can result in penalties and interest payments. And luckily, in that my first year of business, I didn't make a lot of money that it would have really thrown me off. But for a lot of people, and I've seen this with a lot of new entrepreneurs that I coach, their first couple of years of business, no one's ever told them about that quarterly taxing, and also to estimate them appropriately. And so that was two sides of the coin, where one, I didn't know to do them. And then when I did finally know to do them, I wasn't estimating them correctly. And so I was still owing more than I had expected. Now, a couple of years in, like, I know what I'm doing now. And so I highly recommend for people, if you are someone who's running any sort of business and you think you're going to owe more than $1,000 on your return when you file, you're probably due for quarterly taxes. And that's something that you want to get ahead of, so that you're not hit with a big tax bill plus penalties and interest come filing time.
So, about how many years did it take you to finally get into the groove of, okay, this is what I need to do for my taxes with my business?
I would love to say that it was sooner than later, but it took me about 3 or 4 years to really understand what I was doing. Because hopefully if you're building a business, you're also growing your business, and anytime you grow your business, then you get hit with new challenges, or they say in Biggie says, more money, more problems, right? So the more money you make, right, then you get hit with different challenges. And so one of the things that was newer to me in the last couple of years was also really getting clear about retirement deductions, and that changed my tax scenario as well. And again, something else I didn't really know until a few years into my business. I always thought that having a retirement plan, like a 401k, was only if I worked for another company. But then it dawned on me, I'm like, wait, I'm my own company. Can I have a 401k? Wait, can I be my own match? Like, wow, that's an interesting thought, right? So just in the last 2 or 3 years, I started contributing to my own retirement, and that also changed my tax planning.
So how exactly did you get the ball rolling on contributing to your own 401k?
Yeah. So it sounds really scary, and I'm not a tax professional. I'm just a fellow entrepreneur. So all the entrepreneurs here, just make sure you listen to your tax professional. But I had to reach a certain threshold in my business to, first of all, make it make sense for me to have a retirement plan. So because all of the expenses that you would incur for running payroll and for paying those deductions and paying for the administration, like it has to be meaty enough for you to put enough contributions there to offset those amounts, right? So long story short, I went to my tax professional one day and I said, I think I'm going to make X amount of dollars in my business next year. Can I open up my own 401k? And he said, actually, absolutely. We probably should have done it a year or two ago. But again, that's where I say, like, you don't know to ask the questions, right? Like you can't rely on your tax professional to think of all the things for you, right? So I asked about doing that. And so in order to do that, I had to change my company from a sole proprietorship to an S corp. And then when I changed it to an S corp, that meant I had to run payroll. And then running payroll allowed me to also get a 401k company to administer my 401k. Now that sounds really complicated, and to be honest, it is a little bit of a pain in the butt, right, to get it set up that first time around. But now that I'm on that cadence, and because I'm a money coach and I'm very focused on financial independence, I'm now contributing the maximum amount according to the IRS of what I'm allowed to contribute. So every year I've been contributing like around $20,000. Last year it was $22,500. This year it's going to be $23,000. And what's great about doing my own retirement plan is that, one, it lowers my taxable income because I'm doing it as a traditional 401k. Plus, I get to be a match to myself, which also counts as another expense, right? And I also get to do profit sharing. So the headline on this is you get to put all this money away towards your future self, and you get the benefit of saving the money on the taxes, right? And that's something that a lot of entrepreneurs don't really talk about. And I only learned that people weren't talking about it because when I even asked my tax professional, I said, well, I want to put in the maximum amount. He said, I've never had a client do that. I've never had a client want to put the maximum amount, which goes to show that it's just not a conversation that a lot of entrepreneurs are having around how to save up for retirement using their own business.
So let's say someone has a 9 to 5 as well. Can they still contribute from their own business to their 401k?
So the IRS allows you to contribute up to the maximum amount. This year it's 23,000, right? And so it could be between different 401ks. So you could have a 401k in your business and a 401k at your employer. But I don't recommend that you do that. I recommend that if you're going to try to contribute into retirement accounts, that you focus on one account and you try to make the best use of it before you move on to the next one. So the analogy I give to a lot of people, it's like having, going around town and carrying 3 designer bags, one with your wallet, one with your phone, one with your keys. Like, why would you have 3 bags when you can just carry one bag with and make sure you're making the best use of that one bag first?
Right. I love that analogy. Why would you carry all these bags?
Well, I mean, I guess you could if you really wanted to carry a bunch of designer bags.
No. Well, so let's switch gears a little bit. Let's talk about your early bookkeeping days when you used to do it all by yourself. What was that like?
It was sad. I will say Some people love spreadsheets, not me. And I'm going to venture to guess that if you are someone who wanted to start your own business, that you went into this business because there was something else that you were really passionate about other than tracking all of your stuff, right?
Mhm.
But I will say personally, I actually grew up in a family of accountants, even though I'm not an accountant myself, and I actually did terribly in my accounting class in business school. But it was one of those things where, as an early entrepreneur, you're thinking, well, I don't have extra money right now. I'm still trying to scale up my business. I'm trying to be really lean on my costs, and so it just would be cheaper for me to do it myself. But that is such a big mistake, and in hindsight, I wish that I had arrived at that conclusion much faster. I was doing my own bookkeeping for the first 4 years of my business. And to be honest, I think that was 4 years too much. I probably should have outsourced it sooner than later, because chances are, as a business owner, your time is better spent prospecting new clients, maybe working on your operations, figuring out new marketing. I know very few people who actually get a joy out of doing bookkeeping. And so leave it to the professionals. And I learned that it was actually, if I actually traded the hourly rate that I make in my business versus what I would pay someone else to do the
Mhm.
bookkeeping, I was actually saving money. So right now I have a bookkeeping service that I pay about $300 a month to do my bookkeeping, which is way less than the amount of time that I would have spent doing it myself. And if I were to equate how much my hourly rate is, and it would take me, hours upon hours to do my bookkeeping, I'm really saving money in the long run. Plus, I have the reassurance that someone's actually doing it correctly and following the
Mhm.
IRS guidelines. And so I always now advocate, and I know it's a really hard thing to put more money into your business when you feel like you're not making a lot of money, but it'll actually save you a lot of headache in the long run.
Well, Bernadette, I know we kind of stopped listing out the tips numerically. Could we just run through so our audience understands what the 4 tips are for saving money as an entrepreneur?
Yeah. Yeah, so saving money in your taxes. So, number one, if you're a newer entrepreneur, don't forget your startup expenses before you even launch your business. Those might be tax deductible as well. Number two is don't skip your quarterly tax payments, and then also take that extra step to make sure that you are estimating them appropriately so that you're not hit with a tax bill to your surprise during filing time. Number three is to consider whether or not you can contribute into a retirement plan as an entrepreneur, and specifically looking at ones that are tax advantage, like a 401k, or even if you don't want to do a 401k, like an IRA. And
Mhm.
then number four, please, please, please don't do your own bookkeeping unless you absolutely love tracking expenses and it brings you joy. Otherwise, use your hard earned time to actually build your business. And even if you're not building your business, use that time to go hang out with family and friends, because entrepreneurs, we don't get a lot of free time. And so use that time where you can.
Well, thank you so much for joining me today, Bernadette. You are amazing as always.
Thanks so much for having me.
For sure. Bye.